Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey everybody, good morning. Welcome back to another live stream. I'm so happy that you're here and I'm happy to be here myself. I hope you guys are freshened up from the weekend and ready for a new trading week. Real quick as we get started, let me know where you are tuning in from, what part of the world. And remember, you saw it there in the opening. If you want to check out DNA Funded, their promo code, I've got something even one better. Check this out. I'll just change the banner here on the screen. So if you scan the QR code, use promo code A1Live, that'll get you 25% off. Any of the DNA Funded challenges, they sponsor these streams. These streams, to be fully transparent with you guys, it's very expensive to, we have a streaming software, we have a team behind the scenes. I'm in a studio office. Sponsors make this stuff possible. It is, not free for us to be here. I know you could, I could do this for free just from my apartment, I guess. I don't have an apartment, but like if I was in an apartment, I used to do that. It was just solo and the quality of the stream was significantly lower. We've leveled things up. And so if you want to support the stream, keep us on the air, the easy way to do that is if you are thinking about getting funded, consider using our promo code, get yourself 25% off and support our show. Wow, you guys from all over the place. Nigeria, Poland, South Africa again, Alabama, Zambia, from India, Dubai, Maine, US. Mike, I love Maine. It's one of my favorite places. Great memories up in Maine. My cousins live up there. Great times in Maine. It's beautiful during the summer. It's really cold during the winter. Mike, how do you survive Maine winters, my friend? I'm from Georgia, so it is winters are not so bad. Though you might ask, well, how do you survive that summer humid heat? And my answer is probably the same as your answer to surviving Maine cold temperatures. My answer to how do I survive Georgia hot temperatures during the summer is stay inside. Anyways, good morning, good evening, good afternoon, wherever you are in the world. Thank you all for being here. Let's jump into some charts. So I was painfully right in my videos on Sunday, or my videos, plural. I actually did 2 videos on my 2 different YouTube channels, Trader Nick and Trader Nick Stocks. In both cases, I argued that the case for stocks is that we may have actually bottomed out and continue higher this week. Granted, it's too early in the week to call that, but I also mentioned some continuation in gold makes sense, and we've just seen it. And why do I say painfully correct? Well, because I'm not long gold and I'm not long the indices. However, when I say painfully correct, I meant, it looked like specifically what I saw, guys, is if we take a look at the SPY, the ETF. If you watch the Sunday video, I talked about the SPY ETF just pinning this area here, ping-ponging off of it, V-shaped move, follow through on Friday, and lo and behold, we've got a push happening here today back to the all-time highs. Now, I know that not everybody trades SPY, but I do think you should add it to your charts to analyze. If you trade indices, like even if you trade, CFDs or futures or whatever, you got to watch SPY, because SPY is it's like a household name for, hedge funds, everyday traders, stock traders, etc. And when we look at SPY, the gaps can also tell us a story. So we gapped down last Thursday. The gap followed through to the downside and found support right at that FOMC low before bouncing off, following through, and now gapping up today, right? Bulls are just so strong out there. And if you're somebody who's looking at the indices or the gold and you're saying, hey, these things are too high, they got to come down. Look, I don't know how many times we got to say it on this stream. You don't fight roaring bull trends. We have had a carousel, a merry-go-round full of people come onto these streams and say, you got to short stocks, you got to short gold. They're too high. Everything's in a bubble. Look, I hear you. I hear your frustration. Gold should pull back. Does that mean it will? Heck no. Gold is like a woman who knows what she wants. You can't tell her what she wants. You can't tell her what to do. Gold is going to do what it wants to do. And the rest of us just kind of got to trail behind and follow along, okay? Now, here's the thing, right? Gold is at $3,800 an ounce. People have been saying on this stream, gold is going to crash since we broke out of the 4-month-long consolidation around 3,400. The dangers of this, of saying gold is too high, is I'm not even kidding you. People have been calling that gold needs to crash every day, and it just trends high. So then the question, so the natural next question is, so Nick, are you saying that we've had this huge momentum? Are you saying we should keep going from here? Well, if you watch my Sunday video, I mentioned that I would love a pullback. I'm not betting on one, and I am a broken record on this. I've said this so many times. The story is still the same. I'm not willing to bet against this because it's in a roaring uptrend. I'm not willing to buy it because I think we are a little overstretched. But I've said it over and over and over. Overstretched doesn't mean we have to turn around right now. I said in my Sunday video that if I had to say, I said I don't really have a strong prediction for what price is going to do today or tomorrow. But if you pointed a gun at me and you said you have to pick a direction, where are we going on Monday? I said the path of least resistance would be up, because momentum usually forecasts more momentum. Momentum is a strange concept in markets, but typically when something is running up, it will continue to run up. Not always and not forever, and eventually we will get larger pullbacks in the price of gold. Trust me, don't get impatient right now, because you will get pullbacks in gold. What I'm trying to explain, though, is that it could be a pullback that happens way up here. You may never, you could continue to rip through this level and never come back to it, okay? People said this at $2,000 an ounce. I remember it all over the place. People said 2,000 is way too high. It's gonna, it's not gonna hold above 2,000. We never came back. When we officially broke, I guess 2,100 is a better number. Once we broke through 2,100, we never came back, guys. And I can tell you, people said over here, gold's overbought. It's got to come back down. So my warning to you is don't fight a really strong upward trend. So what do we do with gold? Well, nothing up here. If you missed it, you missed it. Unfortunately, you missed it. And that's okay to accept and acknowledge and just say, okay, so what do we do next? Constructive pullbacks to me are now very obvious around the 38.2% retracement level, around 36.40 an ounce. That pullback starts to look good. Okay. Taking a look at silver. Silver also just a monster up move. Like this is remarkable price action from silver. I'm feeling some real FOMO because you guys know, if you've been watching the channel, I got long silver here. I got trailed out right here, and boom, away we went. So trust me, I'm not saying this from a position of, oh, I'm making a ton of money and it's all good. I'm telling you, this is frustrating for me too. I had a really good prediction on silver, and it worked, and I made great money, but it's since doubled up the distance, right? So again, I've been doing this for a long time. It doesn't mean, I have quite a bit of experience trading and learning hard lessons. I mean, that's what experience really is hard lessons, right? And so yeah, I mean, I did great with this trade. That was one of my game-changing trades for this year. Can you imagine if I had stayed in the trade? This would have been this probably would have been my best trade ever. If I was still in silver right now, it'd probably be my best trade ever. But I'm not. So what do I do about that? Do I cry in the corner and pound my fist on the table and say it's not fair and the market's cheated and they scammed me and they hunted my stop loss and a big institution chased my little stop loss? No, you can't do any of that. What can you actually do? You can prep for the next trade. You can line up the next trade, take the next trade like you're supposed to. And as I've been saying often in my videos about what to do in this situation, ready? You can SIBOW. Cracks me up every time. If you don't know, should I buy or should I sell? Like, oh, it seems too high to buy, but shorting this seems risky because it just keeps going. Here's what you can actually focus on doing right now. You can focus real hard, focus on SIBOW. Okay. If you don't know what that means, feel free to look it up. But that's what you should do, in my opinion. That's what I'm doing. So I guess what would that be? So it would be SMBAU. I'm shutting my mouth, right? Because there's nothing I can do. I can't chase this. So what can you actually do? Nothing. You wait. You wait for pullbacks like a non-degenerate trader, right? Even Nick is taken by the brain rot. Man, I'm leading the brain rot rebellion. Okay? So we're on the same page. What can you do? You can SIBOW. Anyways, let's take a look at the dollar. Dollar is pulling back. This is actually more constructive. I really like dollar CAD. Let me see if I can get a trade in on dollar CAD today. Nope, not quite. If you give me dollar CAD pulling back, I start to get interested. I've got a to-do list when it comes to currencies because I actually like the dollar long now. So if I go major currency pairs, so dollar CAD looks good, but not at a technical level I can get in. Dollar Swiss, let's take a look there. Dollar Swiss, I already know what I'm going to say. Dollar Swiss has just been in too much of a downtrend. The momentum is just not there. Whoops, wrong chart. Dollar Swiss. Yeah, see, like I need a leg higher, some strength to show up in this chart. Not quite there for dollar Swiss. Let's keep going. Dollar yen is also getting a bullish reading within the edge finder. Dollar yen, actually, this might be a trade for me. So dollar yen looks really good. That might be a trade for me. If I take that trade, I'll share it inside of Discord. I think dollar yen may have more upside. You've broken out of this consolidation zone that we've been stuck in for a little while. The long side of dollar yen you get positive carry, meaning every day that you hold it on most standard brokerages, you get paid to hold dollar yen. So I like this one quite a bit. Dollar yen is probably a bullish setup for me, or it is a bullish setup for me if I can get the right technical setup. Let's see what else. Euro dollar. Euro US dollar. Let's take a look at this guy. I bet you this one looks good on the 4 hour. Yeah, there's the 4 hour. Look at this. 4 hour chart looks great. Possible short setup here. Yeah, I'm probably going to get long the dollar this week. Now, what's not working well so far for me is my oil setup. I'll talk about that in just a second. The Australian dollar against the US dollar tried to, check this out. So AU came above, broke out above, came down to this area, tried to hold it. You can see the wick tried to push back up. Sellers came back in, pushed it lower. So I don't love the technicals on AU, but I do like the potential downside. Same thing with Kiwi dollar. You had a break, looked like we were gonna, and then you failed out right here. Coming back down. I think the easiest trade for me is euro dollar and dollar yen. So dollar yen on a pullback for the long side, euro dollar. I like off the 4 hour chart. I think you may actually be seeing some momentum breaking down off of this sort of longer term upward trend. This is the dangers of trend lines. You can draw them differently. Whoops, wrong thing. So if I go here, draw it here, right? So see how conflicting the two trend lines I just drew are? One tells you, oh, it's bouncing off support. And the other tells you it broke the trend line. Nothing against trend line traders, because there are people who do well with trend lines. But for me, I find all of it to be significantly less useful than the fundamentals. That's the truth. Technicals are, in some ways, kind of like reading the tea leaves / astrology for traders, in my opinion. Unless you have more of a mechanical defined technical strategy. And when I say mechanically defined technical strategy, I'm talking about like simple stuff. Like you use a 20 and 50 moving average and it's indisputable the signal that you're generating. Like if you can quantify your technical signal definitively, that's more of a mechanical, rules-based, complete strategy. Whereas what I do is not purely mechanical, technical analysis. Like it's actually very far from that. A lot of my analysis comes from studying the macro, studying what's happening fundamentally. So I like euro dollar and dollar yen, not just because the charts look nice, but because we've got some interesting stuff happening. Fundamentals, macro is favoring the dollar over these currencies. So I think right now my top potential catalyst like setups this week do lean a little bit closer to currency setups. I do like the indices, but I don't like where they are trading. So indices sort of put to the sidelines. US oil, I do like oil. It looks like I'm a little early to my idea. Let's talk about the trade gone not so great for me here on oil prices. Oh yeah, I'm about to get stopped out on this. So oil price, I'm going to get stopped out on this one. Tried for a long here. Break, retest, shot off in my direction. Fortunately, my stop loss was initially bigger. So I'm going to get stopped out here, which is perfectly fine. It happens. But this break below structure, that's going to get me out of the trade. I'm going to take a loss on that one, a small controlled loss, perfectly normal to have those. But yeah, oil prices looked good, pushed initially in my favor. Really nice reaction here. But this happens sometimes. And this is the pros and cons of trying to trail a stop loss, right? So, when it comes to trailing a stop loss, the pro of using a stop loss or trailing a stop loss is you can catch massive winners and just let them go and go and go. But sometimes the negatives of using a trailing stop loss is what you're seeing right here, where I had my trade, I got long, the price pushed in my direction, right? Moved nicely in my direction. I trimmed my stop loss from here to where it currently sits. or where it did sit. And then the price completely reversed before I really got a good chance to trail a stop loss higher. So stopped out. And to be honest, I've actually been on a really good winning streak recently. So it was bound to happen. I'm going to keep an eye on oil because I still do like it. The question becomes, where do I try again? Well, the daily chart rejection, don't love that. If we were to see this candle today spike back up, I might get back into the trade. But I don't love the rejection here off the daily chart. See how price just completely rejected this area. I was trading for the breakout. This is why some traders take partial profits. Yoshi, here's the thing. You're correct. And sometimes partials look genius. Sometimes they look really foolish. Everything looks good sometimes and foolish other times, right? That's the thing. There's no, it doesn't matter what your strategy is. Take your pick of how you enter and exit trades. And guess what? There's times where it looks really dumb and there's times where it looks really great. So instead of like, oh, you should have closed out. And I love talking about this because it's really important that we make this distinction. So I got long here. It's very easy as traders for us to start saying, well, you should have taken a partial here and taken a partial here and then taken a partial here. So then when this dumps, you still like made something, right? Well, yes, but I had a silver trade that I've talked about recently that went explosively in my direction. And I traded off the 4-hour chart. And had I so I got long like right here. Had I taken partials on this one, so I got long here. If I had taken a partial and another partial, there's nothing left or very little left to the trade. And then the majority of the move happened after that. So again, you can always play the shoulda, coulda, woulda game in trading. But what is more constructive is looking through the windshield, not the rear view mirror when it comes to trading. Backtest your system and then stick to it. Because no matter what you pick, it's going to look silly sometimes. It's going to look great other times. Learning a lot on this stream. This is great. Well, thank you for being here and consider subscribing if you're new. We are here Monday through Friday. We've got another trader taking over in 7 minutes. So we have like a rotation of great traders from around the world who host these streams after myself. We got more people come on. So stay tuned and subscribe if you're new. There's plenty of free values to take advantage of on these streams. Yeah, VIX up a little bit here. This week you have the NFP report, which is likely to cause some volatility. Yields are pretty unchanged this morning. Euro dollar bouncing, pound dollar. I don't love pound dollar. I think it's too mixed for me. Aussie CAD. I'm still long Aussie CAD. This one is I think it is in profit, not by a ton, but small profit there. SPX looks like it's racing back to those highs. We'll see where that one goes. NASDAQ again. In the Sunday video, my thought process on indices was that I think you're going to continue to see the bull run, and trying to time that top is just a dangerous game to play. Instead, I think that if you're bearish on indices, what you really need to see is you need a clean sweep to the downside, like lower lows, lower highs, failure at these key levels of structure. Before then, I think it's just too hard to try and short indices in a roaring upward trend. Same story with gold and silver, guys. I've seen countless people. We spent like 10 minutes on the stream today talking about this. I've seen countless people trying to call the top on this one. I think if you want to get short gold, this is my opinion. My opinion, if you want to get short gold, you have to see this price action start to form. Because right now, every dip is getting bought. We're going higher and higher and higher. So to me, I would be one of those dip buyers if we got one. And if the technicals and fundamentals lined up. But currently, I'm not getting a strong enough reading on gold or silver to get long. So I'm going to wait for pullbacks. Dow Jones and NASDAQ. Let's take a look at Dow really quick. Yeah, so I'm stuck in a place where most of my setups right now are on the currency front because, NASDAQ would be interested if we got pullbacks, but we're not quite there. Dow Jones, same thing. Dollar index is pulling back today. So that this tells me like my most constructive area for possible trades is probably going to be looking for shorts on euro dollar or longs on dollar yen. I actually prefer longs on dollar yen the most. You really had a nice kind of sequence to the upside forming here. Pulling back. I like this 38.2% retracement zone. We had this consolidation area. We broke out of that. I like dollar yen long. Bitcoin and Ethereum have strong upside moves. No, I'm not really interested in them just because. So what I do, if you're newer to the streams, I don't trade just based off of technical analysis alone. I look at fundamental analysis pretty heavily. And so what I mean by that is I look at statistics about the economy as a gauge to the type of environment in. I think that if you know the type of, what the weather is, you can sail better in it. Same thing in trading financial markets. If you know what the macro outlook is, what the economic outlook is for the US or for the place that you're trading, like Europe or UK, wherever, like if you're talking about trading the euro, you probably want to keep an eye on what the European economy statistics are telling you about the European economy, right? In the US case, so if I'm going to talk about like, do I want to get long Bitcoin or gold, or do I want to short something? Like if I'm going to build the case for it, I want to actually understand the type of environment that we're in. By the way, take a look. Nelson, new member of the channel. Thank you very much for supporting us. I appreciate that quite a bit. Coffee today is on you, my friend. Thank you so much. And a donation. Wow. Thank you so much. Now silver in official papers valued more than gold or GLD. Weird, right? Does it say something to you? Good luck, traders. No, because if you're talking about silver, if you're talking about so here's the confusing thing, right? GLD is just one ETF. It is a big holder of gold, right? But GLD is just an ETF. It's an exchange traded fund that holds gold. The gold market, the amount of physical gold, the worldwide gold market is substantially bigger than silver. Now, if you're comparing the global silver, physical silver, precious metals world versus GLD, which is just one ETF that holds gold for investors, which is a big ETF. It's not like comparing all of gold versus all of silver. That's what I'm trying to say. So I'm not really surprised by that. Like silver, the whole silver market is bigger than GLD. That makes sense. But if you're talking about all of gold, right, versus all of silver, yeah, gold is way bigger. GDXU Chads. GDX is gold miners, right? Gold miner stocks. GDXU is it leveraged? GDXU. Yep, 3x leveraged. I mean, this thing is a monster. My goodness. But so like GLD, the gold ETF, I trade this all the time. I love trading GLD. It's very, it's liquid enough for my purposes. Low trading costs, so holding it. I've traded GLD for, many years. And, but that's not reflective of the entire gold market. It's just an ETF that tracks gold. Yeah, we want silver and gold pullbacks, man. Me too. I think a lot of us do. U.S. stock market opens up in just a minute here. Let's just pull up just to see what the SPX is looking like here as we go into New York session. Do you trade with seasonality? I do. I definitely do. So seasonality is a metric that I do follow pretty closely. So if I were to look at, for example, let's do SPX seasonality. One thing that's kind of breaking the trend here this year is that historically speaking, the S&P 500 actually tends to be negative in September. This year, not so much. This year, we are up in what is historically a down month. October, last 10 years, is about a flat month. November is a monster month. And December is also a strong month as well. Crypto, thank you very much for the 40 rupees, my friend. How about adding a US money supply / printing to the Edge Finder? That's a good idea, especially like the M2 money supply. We might actually have that data. That would be cool to add. May add that to the to-do list. We have quite an extensive list of projects to build for Edge Finder, but that's a pretty good one, and I like that idea. Nick, why don't you add to your positions whenever you move stops? I do add sometimes, but it depends. I have my own sort of my sizing strategy is, it's kind of hard to explain simply because I trade a lot of things. I trade currencies, commodities, indices, individual stocks, options, and sometimes cryptos. So I have lots of different trades that are going on at a certain time. I will sometimes add to a trade if I've trailed stops on it, it looks good, and I have like available cash or margin in my portfolio. I may sometimes choose to, uh, with the risk that has been taken off the table by trailing my stop loss, reinitiate that risk by adding to a winning position. But I don't do it all the time, and it's not something I do very frequently. When are you trading sugar futures? I don't really trade soft commodities very much. I usually trade oil and precious metals. That's pretty much it. So we'll see. S&P 500 moving here. We just got opened up on the US stock exchange. You can see the gap here for SPY. Gap to open here. Question will be, are we going to fill the gap this morning, come back in a little bit on the S&P, or is it going to be sort of a gap and rush to the prior all-time highs? I love trading SPY or watching SPY because I think the gaps actually are really important. Some people don't like gaps. I understand it, but they do tell a story. When you get gap downs or gap ups, that tells you sort of during the low liquidity hours what prices did. So I actually think adding SPY to your analysis can be a useful thing if you trade indices. So NAS, S&P, green in the morning here. Dollar index continuing to pull back. Do we have another person coming on today? Let me just check our schedule. We do. We're supposed to have Ivan. We'll see if he makes it. It's a maybe. By the way, guys, if you're not in our Telegram channel, it's free to join. Scan the QR code that is below the screen here, or if you prefer to click a link, we'll drop a link here in the chat to where you can click that and join our Telegram channel. The reason I think you should absolutely, I'm not just saying that for no reason. We're trying to grow our Telegram channel because we are straight up putting in some serious work in here to keep traders informed. Even if you don't have time to make it to every stream and every video, if you want to stay up to date with some of the analysis that we're doing on the macro side, like specifically what's happening, like this week we have jobs report, for example, highly recommend. If you want commentary this week, as we get some key job statistics sent to your phone, make sure, take 2 seconds, join our Telegram, either clicking the link in the chat, in the description, or if it's easier for you, scan the QR code that's right on the screen here. Make sure to do that because again, this week is pivotal to, if you trade gold, the dollar, currencies, indices, everything is likely to move this week. And it's not just Friday's NFP report. We have a loaded schedule this week, guys. Like this is a big, big week. Let me just show you. We'll run through it really quick. So we have, today is a little bit of a quiet start. Not even just on the economic data front. We also have the concerns about U.S. government shutdown stuff coming in. We're getting another season of that, if you will. JOLTS job openings is Tuesday. That will be big. We'll see if that number continues to decline as it has been in a pretty consistent decline the last few years. ADP is on Wednesday. We also have ISM manufacturing PMIs on Wednesday. Then we've got on Thursday, you've got unemployment claims, of course, the weekly jobless claims. We're hearing from Bank of Japan's Governor Ueda. And then on Friday, we have the big one, NFP. And not just the NFP, but also PMI data, services PMI. So yeah, this is crazy week. Why do you do this for free? I don't do it for free. I make money doing these streams. YouTube ad revenue. I also sell a copy or a software tool. We have sponsors. Nothing about these streams are free, and I'll never say otherwise. No cap around here. This is a hustle for me. I do genuinely trade. I've become a consistent trader through a lot of work, but I also make a lot of money through other things. So No such thing as free. And most things, like if you look at some people will claim it's free. Now we do offer some things genuinely for free. Like this Telegram channel, 100% free. Now, again, it's still marketing for our tools and services, but you don't have to pay anything to just read along with what's happening from our research team. So we do giveaways for funded accounts. We do, we have a free course, multiple free courses available on our website. Head over to a1trading.com. We do a ton of free stuff that is genuinely free, but it also serves a purpose of marketing our tools and services for those who do want to take a next step and purchase something with us. But I'll never claim that these streams are just out of the goodness of our heart. Like, I love doing this, and I hope you know that. Like, I really enjoy making trading content, and I probably would do it completely for free. It just wouldn't be nearly as the level of quality if we didn't have all the professional people behind the scenes who are helping to make it possible, the sponsors, etc. Like, the reason it's capitalism 101. Capitalism 101 basically says the money flows in the direction of services and things that better the most number of people generally, right? Like Amazon, for example. Speaking of Amazon, what's their stock doing? Like, Amazon has made a bajillion people very wealthy, very successful. It's also improved the quality of life for people all over the world who need things quickly. Don't get me on this subject because I'm too capitalist for us to talk about it on YouTube. But true and true, I believe that if you offer a great service and great value, nothing should be free, because if it's really that quality, people will be willing to pay for it. But there's a lot of stuff that Amazon does for free as a way to market ultimately their business and services. For example, you can go on their website and you can get an idea of what going rates for things. Like a couple hundred years ago, can you imagine if you had a minute by minute real-time system for tracking prices of goods and services like Amazon gives you completely for free? That, like, people take that for granted. People have spent their entire lives building that. It's an incredible service, right? Just to be able to, like, if I want to know, like, what is a soccer ball price, cost, the amount of transparency in the marketplace that a company like Amazon brings makes it so that people can't rip you off for the price of a soccer ball. You can pull up on Amazon how much it cost me to buy a soccer ball. So nobody can rip you off on the price of a soccer ball. A couple hundred years ago, you don't have that luxury of being able to price source for free. Oh, don't worry. Nobody's upset. I just think it's, at the end of the day, I want to be transparent with what I'm doing too. Like, there's never a, secret motive. I want everybody to purchase a copy of the Edge Finder. My hope is that by the value I share in my videos, content, free courses, free Telegram, that you'll see the utility of the tools that we've built and consider purchasing them in the future. But if you don't, all good. Thank you for being here anyways, because some people will purchase those things, other people will never, and that's totally fine. That's how the system works, right? If you're interested in exploring the Edge Finder, by the way, here's a quick plug. If you want to get access to the Edge Finder, you can explore it on our website, a1trading.com/edgefinder. And if you need to split it up into a payment plan, we do offer that. We get a lot of questions. People say, I can't afford the full price, but can I split it up into 2 months or 3 months? And we do offer that. So if you want some information, if you've explored the Edge Finder before and you're like, too much at once, split it up into three payments. It's much easier, much more affordable for a lot more people. We have a lot of people who set up payment plans. We have a support team that can help you with that using the link in the chat right now. And maybe we could also, if you don't mind, James, just throw the QR code if you want to chat with us there. You can also do it that. Edge Finder's great. I love it. You're very welcome. You're very welcome. I hope it genuinely helps. I know, I've learned a million things on YouTube completely for free. It's a beautiful thing. And every time someone's doing something for free, I know they're making money some other way, as they should. But they get your attention because they offer something of value for free. Thank you, Jacob. I appreciate that. Hi, my friend. Good to see you. Thank you for being here. Yeah, look at oil continuing lower. So I tried to get long oil, completely flopped, and kind of a frustrating trade, but it's just another one on the roster. So I went long oil prices here, moved in my favor, trimmed my stop loss, but ultimately fell apart here. Monday trading crashed lower. I'm out of my oil longs. Didn't work out. I appreciate that, Joey. Hope the Edge Finder's treating you well. So on to the next one. I do like oil still, but I'd like to see technicals kind of repair themselves a little bit. What I mean by that specifically is oil prices coming down hard here today. I'd like to see some buyers step back in. Like if I'm going to get back into oil, if this candle, I'll tell you what, if this candle like closes like this, right? Which I don't think is very likely, but if you were to get that reversal, that would set up another attempt for me. Any insights on euro dollar? Yeah, so I talked euro dollar earlier, but I am looking for possible shorts on euro dollar. I think the 4-hour chart looks really good. I do like euro dollar. Edge Finder has a bearish reading on it. So euro dollar is possibly a short for me today. I'm trying to determine if I like euro dollar better or dollar yen longs. And I think the answer is dollar yen longs. And we're getting close to an area where I might actually take a stab at dollar yen longs. What I like about dollar yen is you've been in this really, I love this setup, right? Chop for some time, followed by an explosive breakout, retest, because I think the risk to reward of a continuation looks pretty good. GU. Yeah, you know what's fascinating about gold this morning, guys? Actually, never mind. I take that back. I was going to say, I'm confused. Dollar is pulling back. That's adding more fuel to the gold rally. But what I was going to say is basically what's fascinating about gold recently is that despite some dollar strength, gold kept going anyways. Like that's gold bears are going through it right now. I can tell you that. And if that is you, I'm not trying to, it's just that's a tough market to try and short. So yeah, I mean, dollar index to me, I actually like dollar to the upside. I've made this case here, but let's explain a little bit why. So if I look at US economic heat map, why I like the dollar long is specifically we've had some good growth metrics come in. So last week we had jobless claims, but last week we had really strong GDP numbers. Q2 2025 came in at 3.8%. That's really strong growth, especially when we were forecasting. Initially, I believe we forecasted 3% for Q2. So to get 3.8 is very impressive. So you're saying, Jason, you're saying that gold bears just love pain. They just love going through it. It's like the person that loves being in a relationship with the really chaotic, difficult person. They just love the pain. Pain is loved. Again, we're if you're annoyed by me making fun of, like, if you're short gold, just turn it around and say, well, you went long oil and it flopped. So I'm down on oil today. So don't even worry about it. Gold is just a monster, man. That is not, again, just can't short that, in my opinion. To defeat a red flag, you must become the greater red flag. Interesting. I'd say wise words, but those also sound like famous last words, to be honest. Do you day trade? No, I do not day trade. Day trading and scalping, in my opinion, is trading on hard mode. Not to say it can't be done, not to say there aren't profitable day traders, but to me, day trading is hard mode. I've done this for almost 10 years. I have day traded. I've found consistency in day trading, but nowhere near the success rate and consistency that I have found swing trading with fundamental analysis and the daily and 4-hour chart. Look, I recognize that day trading is more popular. If I wanted to grow my YouTube channel, like if it was nothing but growth for me, I know what I would do. I would get in on the day trading and scalping stuff because that's what sells really well on socials. It's more exciting. It's more like instant gratification. But I genuinely believe, actually, no, I take this back. It's not a belief. It is a fact. People are successful swing traders than successful day traders. How do I know that? Don't take my word for it. I'm just a guy streaming on YouTube. There is numerous studies that show the longer the average holding time for a trader or investor, the more likely they are overall making money. I will say that again for the people in the back. The longer your average hold time in trading or investing, the more likely you are making money. That is not an opinion. That is not gut feeling. That is not my experience. That is factual data presented by brokerages and just numerous studies. Like I invite you, don't take my word for it. Go search this up. The average hold time as it goes up, the more likely, the higher the success rate for traders. So if you want the easiest version, now again, there's less upside potentially. I mean, actually, I take that back. There's a lot of potential in investing. Passive investing can be incredibly successful for the average person. Like the average person, buy and hold SPY, you'll likely do well over the long time. Now, I have to show you this really quick, and then we're going to bring in Marco to take over the show. I have to show you this because nothing about trading, investing is easy. So let me show you a nightmare example. If you're somebody who says day trading, swing trading, all of it is way too hard, I don't want to deal with it, I'm just going to passively invest, respectable response. In fact, for most people, it's what they probably should do. You probably shouldn't be staring at screens and trying to trade and do all this hard stuff. But let me be really clear with you. Investing is not an easy antidote to making money either. Why? The S&P 500 is largely considered, actually, it is like the best performing stock market for the last, like, however long, like 100 years or whatever. Okay, so we should just buy it and hold it, right? Like, why are we trading? This is silly. Well, let me show you an example of a market that looks kind of like it does today. It's just trending up and up and up, and it seems to never go down. Let's go back to the year that I was born, 1996, December 1996. Okay, great time. Trust me, I was there. And let's say that December 1st, you bought and you said, forget this day trading and swing trading things. This thing just goes up and up and up. And by the way, at that time, look at what it was doing. Like, it felt very similar to how it does today. 1996. I want to show you an example really quick. You buy and you say, enough of this day trading thing. It's way too hard. I'm just going to buy at the highs here. I don't care. And look at what happened. Your money went up and it doubled. It doubled almost. Okay. Over the course of 3 years. 3 years, you doubled your money. That's fantastic. That's really good returns. Okay. Trust me, I was there. Cedric liked that. Yeah, I was born there. That was the joke. Anyways, 1996. I saw the 90s. Great time. Trust me. Great time to be alive in a baby carriage. And so you make 104%, and you're like, this day trading, swing trading thing, that's for idiots. Why would you ever try? Just buy and hold, right? Well, you ready? Stock market's in an uptrend, looks a lot like today. And let's say, see, I knew it. I knew the stock market was going to keep going. Let's fast forward. The market proceeds to have a huge crash. Remember, this took us 3 years. 3 years. You had doubled your money. It was looking great. And you said, I'm never selling. I'm just a buy and hold investor. And it's the right thing to do, right? Well, look what happened. The market came all the way back to where you started. Inflation adjusted, it was even worse because you also had inflation. Let's just assume no inflation. Break even after let's get it right. After 2,282 days, you are break even on your investment. 2,300 days, let's call it, you are break even. Okay? Well, it gets worse. Okay? Because now you say, all right, fine, keep holding. And look at this. We're back after because there's an old expression in markets, which is you made $1 million, you lost $1 million, you lost $1 million, right? Even though you break even, like even though you made this money, you feel like that money's yours, right? So then you give it all back. You're like, I lost $1 million. Let's say you made $1 million and you lost it all. You're like, I lost $1 million. Really, you didn't lose anything. You just wasted time. Like time just went past. You made $1 million, you lost $1 million. All right, you get your $1 million back. At how long? How long did it take you, right? $3,864. You're back to doubling your account. I'm sorry, not dollars. 3,864 days. You're back to being where you were. You're up, let's say, $1 million. Great. That is years and years and years. What's that? That's 10 years. 10 years have gone by. It gets worse because you keep holding and it goes back down. Okay. So when you say passive investing is just the best, be careful. It's not always the best. It's not always the best. Hindsight bias is the worst. Hindsight tells you markets only go up right now. So be careful. So 4,473 days, we're back to break even again. And to get back to our doubling of the account, how long did it take? Here's the final answer. We started our investment journey December of 1996. We just bought and held the S&P 500. We went through some pain and turmoil. By the way, the psychological damage of this, that'll hurt. Okay, to get back to our highs, it took us a total of 5,933 days. Someone help me out. Do the math. How long did that take you to get back to the point where you've regained from your starting point where you doubled your account? How long did it take you to double your account? Passively buying and investing. 5,933 days. I mean, I guess we could just do the math. 1996 all the way to 2013. That's how long it took you to get back to your gains. Okay? 16.2. Thank you very much, James. 16.2 years. Can you actually imagine? Think right now. If you said, forget this day trading, forget the swing trading, forget the active management, I'm just buying and holding. Can you imagine if it took you just to double your investment, 16 years and a couple trips to the therapy sessions in between? Like these are violent periods. So again, now we're living in a time where the markets have done nothing but go up. By the way, before all this happened, see what was happening then? What happened to your oil trade? I got stopped out. Took a really small loss on it. I say really small because I was able to trim my loss on it, trim my stop on it. I trimmed my stop just below this area. So yes, I took a loss on it this morning, but so far, first attempt on oil didn't work out. Gonna watch to see if we can get some breakouts higher, but I didn't like the rejection off the daily. So anyways, I hope that was a useful I hope that was a useful response to just Jason's. I know he didn't actually say this, but he's teasing this concept where we see this all over the place. But Nick, markets always go up, right? Be careful is all I'm saying. Remember me in 10 years from now if we get a sideways market. If the market goes up for 10 years, then forget what I said. But you never know, and that's the point. You don't know with certainty what markets are going to do next, and they could keep going. Trust me, they could go for a lot longer. But just be careful drawing the conclusion that markets only go up. Okay, guys, we are going to pass over the show to our next show host. Before I do that, remember that if you are interested in learning fundamental analysis, what we're talking about here is game-changing stuff, potentially life-changing stuff. Like, I'm not even kidding. I know that sounds dramatic, but what we just went through, 16.2 years of time, like, let's not let that be us. Let's get smarter about what we're doing. Let's grow wealth over time together through slow and steady practices, not big gambles, not risky scalping or day trading. Like, if you're here for the right reason, let's swing trade our way to success. Let's follow momentum. Let's find the places to be at the right time. That is the whole goal of what I do as an active trader. If you'd like to join me on that journey, I invite you, take a second to join the Telegram channel using the QR code right below my camera, or with the link being dropped in the chat right here. Join us in the Telegram. Let's go on this journey together. Let's grow our accounts. Let's grow our wealth. And let's do so in a practical, approachable way. If you enjoyed today's session, hit the thumbs up button for me. Don't go anywhere because the show's not over. We got Marco from Marco's Trading Journey coming up next to talk a little bit more about what he's seeing in markets. Stay tuned. He'll be right up after this. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So let me just set things up. Okay, and if you want an even bigger discount on DNA Funded, so just for you guys watching the stream right now, it's A1 Live. You can get 25% off with A1 Live code. So let's get into the markets. And let me check the comments. So I hope everyone has been doing well. Hey, Ball Out. Hey, Dragon. Yeah. Here comes Marco on his yacht. No, I'm on a jet ski. Not yet with the yacht. So what has been going on? Well, we had a couple of news points last week. So I was traveling on Thursday and Friday, but I kept up with the markets, and we had the SMB policy rate, SMB press conference. They left the rates unchanged. Other than that, we had some dollar news. So some numbers, unemployment claims, and the PCE price index. So unemployment claims came in less than forecasted, which is good for the US dollar. And the PC price index came in right with the forecast, but you can see the usual effect is this one right here. So what was the reaction on the DXY? Let's check it out. DXY had a big bullish scenario last week. So from Monday to Friday, we had, or not to Friday, but to Thursday, we pretty much had a pump to the upside, which surprised, I'm sure it surprised a lot of people. It also produced a short squeeze because a lot of people were short before the Fed pivot, before the 25 basis point cut, but then hawkish commentary. Again, if the interest rate statement comes as forecasted, then it's the future projections. It is the commentary from Powell that actually matters. And let me just turn on the second light. So future projections were that Powell flagged inflation as being a risk, and also he said that he's not willing to cut aggressively, which made the DXY actually gain value, which created a short squeeze, made a lot of people flip from bears to bulls. And you can see the expectations in the Fed Watch tool have changed a little bit. So as you can see here, the 29th, pretty much a cut is sort of guaranteed, like 89%. But then in December, it's still not a guarantee if we will get the third cut in 2025. So the uncertainty is getting higher and higher, which could be a bullish case for the DXY, for the US dollar, because the overall positioning was short. Too short, if I'm being honest. So too many people were short. We will see what will happen. Remember, this week we do have non-farm payrolls, okay, non-farm employment change. If it is negative, or if it's much lower than the forecast, could be a problem. If it's as the forecast or higher, DXY, I think it goes up. I think there's quite a lot of room. I think the DXY will react much more with much more bullishness on good news, then we will get bearishness or a sell-off. So I think any sort of a sell-off will be minimal, but any sort of a bullish move will actually have some large momentum behind it, because the positioning is set up like that most people were short. So short squeezes could continue happening, on the DXY. So one thing I also wanted to comment on, I did talk about this last week, but I wanted to briefly repeat it. What was the catalyst for the sell-off? And I think this is really important to understand. I think this is really important for the macro story. So what was the catalyst for the initial sell-off on the DXY, on the dollar? Well, it was Trump. New economical regime, new political regime, tariffs, crazy stuff, crazy tweets, investors losing confidence, big players, institutions, hedge funds selling the DXY, selling the dollar. Well, that is done. What's the new narrative? It is the Fed. Everyone is looking, what is the Fed doing? So the Fed has the full attention. Now, in order for the DXY to have a massive sell-off and to break the 96.4 level and to continue, you would need a massive, massive catalyst. I don't think the current narrative, I don't think the current potential catalyst is that strong to push the DXY much, much lower. So I think we're either going to be flat, so we will either do this, or we will go up. I think those two scenarios are much more likely than a sell-off in the DXY. So that's the DXY story. Just wanted to put it out there. Let me check through the comments. Let me see what you guys are saying. So DNA funded terms are harder than FTMO. If you can mention the specific thing that is harder, maybe we can comment on it. I would say they're pretty similar to FTMO. I would say the pricing is better. So again, if you use the code A1 Live, you can get 25% off, and you get a much better price than the FTMO alternative. So I would say the pricing is better. If you can mention what your concern is, maybe we can take a look. Gold in 1 month. So we will take a look at gold. Spacious jet ski office chair and everything. Hi Marco, can you check USD yen? Yes, for sure. The Telegram link is not sending me directly to Telegram. So, okay, I think someone from the team will be able to help you with that. If you need help, you can go to the A1 support. There should be another link in the description of the stream, or you can go to the A1 trading website and contact the live support if you're having issues with the Telegram link. Youngest millionaire is gone. Okay, goodbye. Slugmeister, hey Marco, what's up? Hey, Slugmeister, global supply increasing, weak economic data and uncertainty. So I think you guys are talking about gold. All bear lifted global supply. Jesse says, hi, Marco, how do you enter your trades? Well, I can quickly go through the USD CAD setup that is currently running in some nice profits. So USD CAD, let me explain how I entered this particular trade. So it was a very fundamental play. I like to mix fundamentals, technicals, and macro story, or maybe even sentiment. So many different keys. 2 is the minimum, there's no maximum. So as many confluences as I can stack, as many pieces of the puzzle that I can collect, the better. In this case, CAD was very weak. It still is very weak. We can go through the edge finder. So both short term and long term. So what I like to do with the edge finder is I like to do short term analysis and I like to do long term analysis. Short term is the economic heat map. So these are the latest numbers, and only 25% of the latest data is coming out better than expected. Most of it is coming out bearish for the CAD. That's short term. So short term bearish. Now long term, I'm looking at 3 data points. First, the GDP. All over the place, even negative. Bearish. I'm looking at the unemployment. Extremely, extremely high. 7.1%, that is massive. So bearish. And I'm looking at the CPI. Is there room to cut interest rates? Is there room to help the economy? Is there room to increase the GDP? Is there room to lower the unemployment rate? No, not much. So we are already at close to the 2% target. That means they can't really lower the rate without raising inflation above the target and causing a potential spiral of inflation. So now you can see both the short-term data is bearish, the long-term data is bearish, the housing prices in Canada are super bad, so they're going down, meaning to buy a home, it's now less expensive than it was 2 years ago, which is not good for the CAD. So CAD very weak. USD at this point was, in my opinion, oversold. Okay, at this point, the DXY was, just above here. And I thought everyone is short. When everyone is short, time to go long. So buying USD against the CAD, I thought was a very good idea. Positive swaps as well. Always, if you're trading Forex, if you're a swing trader, if you're going to be holding your positions, always check the swaps. So let's check the swaps. You can check that on the carry trade scanner, USD CAD. You actually get positive swaps for holding this position. So every single day that I'm holding this position, I get paid positive swaps for USD CAD. And again, if you guys want to get this software, it has everything you need. It assembles all of the data, puts it in one place. No need to waste hours on the internet scouring for the numbers, looking at different analysis. You have it all here. If you want to check it out, if you want to get the software, you can use my discount code, which is MARKO. Okay. And this goes for the A1 Discord as well. So if you want to get the Edge Finder, if you want to get my trade signals, get my trade analysis, daily forecasts, fundamental events breakdowns, weekly trade recaps, you can join the A1 Discord. The link is in the description of this live stream, and definitely do use my discount code. So I decided it would be a nice time to go long at this point. Stop loss goes below the swing low. Very simple technical analysis. Take profit goes to this swing high because I thought it was an area of resistance, and I thought it gave me a positive reward to risk. As you can see, the take profit is bigger than the stop loss. Now I have everything. Fundamental analysis is good. Technical analysis, we established some levels. We are overall sort of starting an uptrend. We are above the 20 MA. Housing prices in Canada are going down. So we have a lot of confluences to buy. We have assembled the puzzle, and it's time to buy. And basically, now we are close to hitting the take profit. This can still reverse, don't get me wrong. So we can still get this. But at the end of the day, whatever happens, I know my win rate, I know my statistics, and I know this was a high probability setup. I know the probabilities are with me on this trade. I know all of the confluences were telling me to buy. So whatever happens, take profit or stop loss, I'll be happy that I followed my plan. And it's all about the numbers. So at the end of the day, it's a numbers game. The more trades that you execute that follow your plan, that have all of the confluences needed, that have an edge behind them, the closer you are to success. So the more trades you take, the more time there will be for the probabilities to play out, and the more percentage you will make. Okay, that is the basic methodology. It's not hard. Once you learn, once you execute a trade a few times, once you test in back testing, live trading with minimum lots, live trading with full size. Again, it takes some time, but once you learn it, it's not that hard. And what makes it even easier is joining the Discord, learning directly from Nick, Chris, Iwind, and me. That makes your progress skyrocket because you get first-hand experience on how to actually trade. Okay. So that's the trade idea. Now I wanted to go through gold, silver, UJ. That is what we talked about. So gold, extremely bullish. Gold is in an absolute explosion to the upside. It's looking very, very overextended, if I'm being honest. So I'm not looking to buy at these all-time highs. Am I looking to sell? Absolutely not. So I think selling at this point, if you don't have a trading edge that is like extremely advanced, if you don't know something, if you know something that 99% of other traders don't know, then go ahead and short gold. I personally don't have that sort of a trading edge. I'm not looking to go short. I think it's very dangerous to go short, especially if you're a swing trader. Maybe scalpers can benefit from small pullbacks, but this has gone parabolic. This has gone up with massive force, and I don't see this trend stopping soon. I'm just looking for a pullback to get in. So I'm looking for a small little measly pullback, and maybe I will be able to get in. If I don't, it's fine. It's all part of the game. It's all part of the probabilities. But I would like to get in. It's pretty much the same story with the NASDAQ and silver. I would say these three instruments and the S&P are called liquidity sponges. So they just take up so much liquidity. They just take up so much buying that they keep going up. So this current scenario, this current market condition is called, I would say, liquidity sponge bullishness. So these three assets on my watch list are taking up most of the liquidity, are taking up most of the buying pressure, and they just cannot seem to go down or pull back at all. So I'm looking to get in on the train. Who am I to say this is the end? Who am I to say that this is going to go short? I'm not a perma bear. Perma bears are very popular online, but they're also broke. They don't make any money. If you're a perma bear, if you keep shorting this, you're just going to blow your account. So it's very popular to be a perma bear, but perma bears never make any money. You have to buy until the trend flips. So until the music stops, we just buy. We just buy the NASDAQ like crazy. But I'm smart. At least I would like to think that I'm smart. And I don't want to chase the highs. I don't want to buy the all-time highs. I want to get in on a pullback. I want to have a positive reward to risk, right? I want to have a better reward to risk. So if we do pull back a bit on the NASDAQ to, let's say, 2,400, I can aim for the highs as my first take profit and have a positive reward to risk. If we can pull back to, let's say, 36, 34 on gold, same thing. Silver, let's say 43 level would be a nice area to see a pullback. So that is what I'm looking at. Now we mentioned UJ, or there was a request for UJ. So for UJ, I had a trade on very short term, closed it on Friday for 1.4 R. This is not part of the fundamental strategy. This is a whole different thing that I'm experimenting with. That is why this was not a trade signal in the A1 Discord. So you can ignore this trade. Right now, let me actually hide it. Right now, I'm flat on UJ. Okay, that was more of a scalp that I had last week. Right now, I'm flat on UJ. I think we will just continue to be range bound on this currency pair. I don't yet have a defined view. I think there's better opportunities out there. You have to think about who is a fiscal winner and who is a fiscal sinner. Let me go through the chart. So let me show you the fiscal winners: dollar, euro, Aussie. Okay, those are the current fiscal winners. I'm not talking about just the short term. I'm talking about short term plus long term. Now let me tell you about the fiscal sinners. Pound and the CAD. Biggest losers right now are the pound and the CAD. I'm talking about long-term data and short-term data. So what you want to structure, or how you want to structure your trades, what you want to do is you want to buy the dollar, buy the euro, buy the Aussie. You want to sell the pound, sell the CAD. I have those positions on. Aussie CAD buy, USD CAD buy, Euro CAD buy. What I'm looking to see, can I sell the pound? I'm looking at GBP USD. It's kind of flat. I want to sell it, but it's flat. It looks range bound. I'm looking at Euro GBP. And I was in a buy trade. Where is it? Should be here. Yeah. So I was in a buy trade. This was also a signal in the A1 Discord, by the way. A nice winner in the end. But now we are stuck at a resistance level. So now we are stuck at this level of resistance. And I don't want to buy no more. We can easily range around this place for a long, long time. So we also have a cup and handle potentially. Cup handle, which is a bullish pattern. But until I see a breakout to the upside, until I see a candle like this that closes above on the daily chart, I will be more patient. So that's my game plan as far as currencies go. Let me check the comment section. Let me see what you guys are saying. Okay, let's see. USD Swiss, USD Swiss. Let me check the USD Swiss. I have to brush up on my Swiss analysis. I mean, it's bearish. It is bearish, but I'm kind of neutral / bullish on the dollar. Would I like to go short here? No, not really. I think it's also negative swaps. Let me see. I think this could be a very expensive position. So if we check the carry trade scanner, here's the CHF. Yeah, this would be a very, very expensive position if I sell USD Swiss here. So not for me. I think it's too expensive. I don't think it's worth the risk. If you're looking to sell, I think there's better opportunities out there. I don't really want to go short on the dollar right now. Okay. Let's see. What is that indicator that you're using? This is GT recent high low by Bong Hyun. Okay. Very simple indicator. Just marks out the swing lows and swing highs, makes it a bit more visually easier for me to spot these things. Do I need it? No. It's just a visual aid, to be honest. So it's nothing fancy. And it's free. If you want to put it on your charts, it's absolutely free in TradingView. Miracle says, thank you, Marco, for explaining. I have the Edge Finder, but I didn't know how to use it as you explained. Your breakdown, it's very helpful. So yeah, thank you for your feedback. And I can repeat it because maybe I can make it a bit more simple. So in my analysis of currencies, I look at the short term and the long term, okay? So I use the Edge Finder. If both short term and long term are bullish, I buy. If both short-term and long-term are bearish, I sell. So for short-term, I use the economic heat maps. Let's look at Canada. Looks very bad. So short-term is definitely bearish. Now long-term, I use 3 data points: GDP, unemployment, and the CPI. You can use more, but I like to keep it simple. These are my main things. So then I establish the long term. That's how I do it. Very simple stuff. You can do it in 3 minutes once you kind of get in the groove. But you can bet that if both the short term and the long term are bearish, that's a very good trading edge to have. If both short term and long term are bullish, that's a very good trading edge to the upside. Okay. So very easy stuff, easily applied to the charts. Now, again, you have to view technical analysis as well. You don't want to sell right at support. You don't want to buy right at resistance. For example, Euro GBP, it would be kind of crazy for me to buy at resistance here, even if the edge finder was screaming bullish, I would still be hesitant to buy until I see a breakout. It's just my style of trading, and I think we could very easily get stuck in this position and pay negative swaps. In this case, Euro GBP, that's negative swaps, which you don't want to do. So that could be trouble. Have you moved your stop loss to entry now? USD CAD? No, I haven't. So for USD CAD, I have not yet trimmed my stop loss. I just have a take profit set. Stop loss is at the original level, and I'm keeping it that way for now. All of the updates will, of course, go in the A1 Discord. So your main entry confirmation is fundamental. Do you look for any technical setups or patterns? Yeah, my main thing is fundamentals. So my main reason to take a trade is fundamental analysis. As far as technical setups go, patterns go, I don't use it for this particular strategy. I just use levels: support and resistance, static support and resistance, dynamic support and resistance. For example, how the EuroCAD broke out of this massive resistance. See, look at this daily chart. We had massive resistance. We clearly broke out of it. So I did buy it, but I bought it once we broke out of that massive resistance. So I pay attention to key levels. All professional traders do that. Okay. Every single trader that I personally have researched, read about in Market Wizards, or researched online uses some type of support and resistance on the daily chart, weekly chart, monthly chart, to establish some levels to see where he can get a positive reward to risk. Because it's all about having a positive reward to risk. You don't need a high win rate. You just need your winners to be far bigger than your losers. Okay. So I do want to take this time to mention the sponsor of today's video. You may have seen it at the beginning of the stream. It is DNA Funded. So this is an account that I have for demonstration purposes. It's a 100K account. Currently in some profit. But if you're looking for a reliable prop firm, if you're looking to expand your trading capital, the most important thing when looking at a prop firm is, will they pay you out? Who is running it? Will they be here in the next 3 years? Okay, so those are the 3 key metrics. DNA Funded fits all of those criteria, and you can get a very nice discount by using our code, which is A1 Live. So this discount is specifically for you guys watching the live streams. 25% off A1 Live on any challenge on the DNA Funded portal. I personally like the 2-step challenge, 50K or 100K. That's what I prefer. It all depends on your, basically, how much do you have to buy the challenges and how confident you are in your trading edge. If you don't have a trading edge, you have no business buying a challenge. So this is only for traders that already know they're profitable, already have a trading edge, and have proved that in the live markets. Why 95 to 98% of retail traders fail a challenge? It's because they don't even know what a trading edge is, and they haven't yet proven themselves in the live markets. They just view the challenge as a casino, 50-50. Maybe I will win, maybe I will lose. And then they lose because that's how the game works. Also, you might ask, how much time will it take for me to finish a challenge? Okay, we can also take a look at their website, DNA Funded. Hopefully it doesn't log me in again. Let me see. So this is the criteria, the 2 phase one. That's what I like. 100K. First phase one target is 10%. Phase two target is 5%. Most retail traders think I'm going to do this in 1 to 2 months. Is it possible? Yes. Is it probable? Absolutely not. Okay, most people, by using that sort of risk management, by risking 3% or 5% per trade, they're going to blow the challenge. So it takes quite a while. It can take 6 months, 8 months. It can even take a year for you to finish these profit targets. But that's okay. Making 15% in 1 year is awesome. It's amazing. You're already doing better than 95% of hedge funds out there. Most hedge funds cannot beat the S&P 500. If you can make 15 to 20% per year, you should be proud. You should pat yourself on the back. Of course, if your drawdown is decent, if your drawdown is 50%, then you're doing something wrong. But if you have a good drawdown of, let's say, 5 to 10%, you're set. You're already an amazing trader. There is no time limit. There's no reason to rush. DNA Funded is a reliable prop firm that will be here in the next few years, while most other prop firms will be here for a couple of months. So even if it takes you a year to pass a challenge, it's okay. It's part of the game, part of the probabilities. You're not going to be making 60 to 100% return every single year. That's fairy dust. That is crazy. That is what scammers promise you. But even if it does take you 12 months, it's still worth it, because with $549 minus 25%, so it should be around 400 and something, you can get not 100K, because your maximum drawdown is 10%. See, you get 10K. Okay, so for 400 something dollars, you essentially get 10K. Okay, then it's a 90% profit split, so you get, let's say, 8K of capital that you can trade. I would say it's worth it. That's why I'm also personally using them. And that's about it for the plug. Let me go back to the comment section. Let me see what you guys are saying. So, DXY, gold, oil. Let's see. Oil, let's check out oil. Let me see oil. Oil had a big push last week. A big push to the upside. I'm not closely following oil. I'm not closely following the fundamentals. I think it's very much impacted by geopolitics. So it's very tough for me to execute a position. You know, you can have Israel and Iran. You can have Russia. You can have Ukraine news. You can have USA versus Russia news. So very, very volatile asset. Even if your fundamentals are on point, you can still have something unexpected and price explodes up or explodes down. So I don't like trading it. I think we're flat right here. I think we are stuck in a range. In my opinion, according to my personal trading plan, there is better opportunities out there to be buying or selling. So oil is not a big focus. If I had to give you a forecast, I would say it's probably neutral / a bit bullish. Why? Well, because I think US is doing well. I think most of the economies in the world are doing okay. As economies grow, so does the demand for oil. There's more transport being done, more transport of goods, more transport of people. So prices go up, okay? But I'm not looking to place my money on such a bet. So the overall sentiment for the US dollar will be confirmed by the job data. Well, it will be another number. So right now you can look at the trend. You can look at labor NFP. You can see the trend. It's clearly down. So we're not doing so well as we were doing, let's say, a couple of years ago or 2 years ago. It's in a definite downtrend. What I would like to see is this flip to an uptrend. For example, like we had, let's go 2 years back or 3 years back. Let's go even more back. Okay, let me just set this up. Let's try it like this. Okay, we have this thing which is bothering me for my trend. Let's try 8 and 6, but not months, but years. Years. See, this would be better if it looked like this, sort of maybe in an uptrend / being a bit flat. So currently we are in a definite downtrend with NFP. Let's go back to months. So yeah, definite downtrend. We have the release on Friday, NFP, and we will see. What is the current story? If you're wondering about the Fed is doing cuts, 25 basis point cuts, but they have a hawkish tone. So Powell has a hawkish tone. Powell is concerned about inflation. It was also mentioned, if you follow Financial Juice, great free website for breaking news, you would have saw a couple of Fed members flagging inflation as a problem. Okay, so clearly they're concerned about inflation. That is hawkish. That makes the DXY go up. DXY. Yeah, that makes the DXY go to the upside. So we will see what will happen. But if you do have, we can talk about a couple of scenarios. If you have a negative number, the dollar crashes. If you have the number that is far below 51, the dollar probably goes down a bit. You know, I don't think there's going to be a massive reaction, but I think we go down. If you get the same number as the forecast or a number above the forecast, I think the dollar can gain some value, because that would mean less rate cuts. That would mean an even more hawkish Fed, and yeah, DXY goes up. So my conclusion on DXY is any negative numbers for the DXY will not make the DXY drop out of the sky, but instead maybe like slowly drop lower. But any positive data, any positive NFP prints, in my opinion, could have a massive or quite big reaction on the DXY. Okay, so let's see. The horizontal lines. The horizontal lines are this. So GT, recent high, low, Bong Hyun. And if you're wondering about my settings, because you do have to change the settings, here it is. These are the inputs, style, visibility, but this is what you need, okay, inputs. So you can just copy my settings. Okay. Why don't you do the phase 1 or rapid? Because I think you get the best. I think you get the best conditions with the 2-phase. I think you get the best max daily loss, the best total loss. You get a static drawdown, not a trailing drawdown. Trailing drawdown is pretty problematic. Okay, I made a video about it. It's on the A1 YouTube channel. Trailing drawdown, search it. This doesn't have that rule. You get good leverage and you basically get good conditions as well. 10% phase 1, 5% phase 2. So for my personal trading and trading style, 2-phase, 50K or 100K works the best. Okay, DNA doesn't allow copy trading from my live account. I'm going to have to look into that, but I do think Traders Connect Trade Copier offers copy trading from a MetaTrader account to a Trade Locker account. So maybe you can check them out, but I'm going to do some research on that. Okay, trailing drawdown is not ideal for swing traders. Yeah, trailing drawdown can kill your trades. It's a rule made up by prop firms to make you fail. It is what it is. Prop firms want you to fail. They make all of their money from the failed challenge fees. That's just how the industry works. Brokers, it's the same thing. Do you think your broker takes your trades? No, they don't. So they just book everyone. They rarely actually take your trades in the market. Most of the time they bet against you because they know the statistics. 95 to 98% of traders lose money. So I am approaching the end of my segment. I will go further for maybe 1 or 2 minutes, but yeah. So trailing drawdown, you want to avoid it. And the two-phase account has static drawdown, which is very important. I'm a swing trader. I don't take many trades. I take maybe 2 trades per week on average. So this fits my trading style the best. If you're a scalper, it may be a bit different. If you close every single trade before the end of the day, it may be a bit different. You have to do your research. You have to see what is the best for your personal trading style. So I think we ran through most of the pairs. Crypto is up today. Ethereum, I thought Ethereum was going to sell off. Looks like it broke lower and retraced. So it was sort of a failed breakout lower, but it's still not that interesting. I'm not seeing a lot of interesting price action on Bitcoin or on Ethereum. I'm being more patient with those. This is this on the top. Sorry. This on the top is my main watch list. Main takeaway from this live stream: sell the CAD, sell the GBP, buy the dollar, buy the Aussie, buy the euro. Look for pullbacks on the NASDAQ, gold, and silver. That's it. That's my trading edge. That is what I'm waiting for. You can catch me tomorrow. I will be live streaming every single day this week. So if you guys have any more questions, you can catch me tomorrow. Schedule is online on the A1 Trading website. You can find the live stream schedule. Check out DNA Funded as well if you're looking to expand your trading capital. Good luck in the markets. Wait for NFP on Friday. What you may see is a bit of a slowdown in price action. Usually on the week before NFP, a couple of days before NFP, the markets will be a bit flat or a little bit slow because everyone is waiting for the print to come out. Okay, that's it. Thank you. See you in the next one.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.